The job market just dodged a bullet, but is the recovery as strong as it seems? Private payrolls surged by 42,000 in October, beating expectations and easing fears of a labor market collapse, according to ADP. But here's where it gets controversial. While big companies are hiring, small businesses, the backbone of job creation, are shedding jobs at an alarming rate. And this is the part most people miss. Despite the tech boom fueled by artificial intelligence, sectors like information services are actually losing positions. So is this recovery? The gains were led by trade, transportation, and utilities, which added 47,000 jobs, while education and health services grew by 26,000, and financial activities contributed 11,000. However, not all sectors shared in the growth. Information services lost 17,000 jobs, professional and business services shed 15,000, and manufacturing continued its struggle with a loss of 3,000 jobs. Despite President Donald Trump's tariffs aimed at revitalizing U.S. factory work. Is this a sign that tariffs aren't delivering on their promise? Interestingly, all job creation came from companies with 250 or more employees, which added 76,000 jobs. Meanwhile, smaller businesses lost 34,000 jobs. This trend is concerning, as small businesses typically account for 3 out of every 4 jobs created, according to ADP chief economist Neela Richardson. While big companies make headlines, small companies drive hiring, Richardson noted on CNBC. The weakness at the small company level is a red flag and likely explains why the recovery has been so sluggish. Despite modest job growth, wages continue to rise. Year-over-year pay for workers staying in their jobs increased by 4.5%, matching September's growth, while job switchers saw a 6.7% bump, slightly higher than the previous month. Richardson added, private employers added jobs in October for the first time since July, but hiring remains tepid compared to earlier this year. Pay growth has been flat for over a year, suggesting a balance between supply and demand. ADP's monthly average of 60,000 new jobs has slowed significantly in the second half of the year. Typically, ADP's report takes a backseat to the Bureau of Labor Statistics (BLS) non-farm payrolls report, released 2 days later. However, due to the unprecedented government shutdown, the BLS has suspended data collection and releases. Wall Street had anticipated the BLS report to show a 60,000 job decline and an unemployment rate rise to 4.5%. Federal Reserve officials have shifted their focus from inflation, which remains above the 2% target, to the labor market's health. Last week, the Fed approved a quarter-point interest rate cut, targeting a range of 3.75% to 4%. With the BLS report on hold, officials will turn to other data this week, including Challenger, Gray Christmas's layoffs report, state-level jobless claims, and the University of Michigan's Consumer Sentiment Index. Meanwhile, job postings on sites like Indeed have slumped to their lowest levels since February 2021. So what does this all mean for the economy? Are we on the path to recovery, or are we ignoring warning signs? The job market's resilience in October is encouraging, but the struggles of small businesses and certain sectors raise questions about the sustainability of this growth. What do you think? Is the economy on solid ground, or are we headed for more turbulence? Let's discuss in the comments.